Hello and namaste. This is 𝗦𝗧𝗢𝗢 once again from Moscow, and welcome to my channel Financial Market Analysis Twist by 𝗦𝗧𝗢 Shah. So in this video I would like to just give you some update regarding iron ore and coking coal market and its impact on this individual stocks and which are you can. So it's a very interesting update, and also in this video I would give a small update about the savita oil technologies results has come. So before starting this video I would just request all of you to please subscribe to my channel if you have not yet subscribed, and please push the notification button so that you can keep on getting the videos as soon as I come out with some unique videos. And this is my sincere endeavor to help all the people in their search for this financial gains and investment without any of my selfish motives. So it's just I share my knowledge with all of you. So whatever I little bit I know are from my experience and from my skills and knowledge. So that is just my endeavor. So please, if you like this video, you can just put a like. It doesn't cost you anything, but it will motivate me to come out with some new more ideas for the benefit of the people. And also you can share this video with as many people so that it benefits maximum people. So let's start with this thing. See what has happened in this last few days, or can say few months. Is very interesting development has happened regarding the iron ore and coking coal. As you know that there is a tension between China and Australia regarding due to this coronavirus pandemic, and blame game happening between these two countries. And China has kind of banned, not officially, but yes, it has given a kind of advisory so that all the coking coal which China used to import from Australia, it's kind of trickled down to zero, because if you look at this till last month, in 11 months of this last year, they had only imported 5.5 million tons, as compared to this, the previous to previous year 2019, their annual import of coking coal from Australia, the China's annual import used to be around 40 million tons. Now this most of this requirement has been diverted from Canada and USA. So in a way it is kind of that geopolitical tension this Australia has lost. So but what has happened is that that hard premium coking coal which is required for this melting of steel, which is required in this reduction of from iron ore to steel, it is required this process. uh, to compensate for this loss, or that import from this hard premium coking coal, uh, they are most of these Chinese steel companies are increasing more and more of the high grade iron ore, because whatever they are getting from Canada and USA, it's not the same quality like Australian high grade premium coke. So to compensate for that, in technologically they are trying to replace, not replace, but they try to use more high grade of iron ore, uh, because this low grade of coking coal doesn't reduce that much of this steel from that Fe, so that high grade iron ore where the Fe content is more than 65% and above. So they have switched to this higher grade of iron ore. So more demand for the high grade of iron ore, and the high percentage Fe iron ore has increased in China. And this is a structural shift, at least for the next 1-2 years. You will see this, because of the geopolitical tension is not going to resolve it in very soon, and this trend is going to continue. So what is happening is that is the reason you see that iron ore prices have gone to an all-time high. And if you look at this coking coal prices, there is a huge premium from this FOB to CFR in China. So FOB Australian prices are say around $108 per ton, dry metric ton of coking coal, premium grade. And the same price when it reaches to China, the CFR China prices is around 211. So there is $100 premium on this freight. I mean, it's unprecedented. And if you look at this, and that is why, because of that, more and more Chinese steel producers are using more and more high grade of iron ore to compensate for the less coking coal, or low grade of coking coal, which they are now using, buying from Australia. Sorry, not from Australia, from Canada and USA and from other countries. So this demand for high grade or the 65% and above Fe content iron ore will continue. This is a very interesting aspect about this regarding steel making. So in my view, what is happening is that you will see this iron ore prices remaining high, and high, particularly the high Fe content. So this demand for this sponge iron, or you call it pellets, high grade pellets, which in India there are only two three producers of these high grade pellets. So the demand for this from the Chinese consumers, from the Chinese steel making companies will increase, and this will keep the prices of even high grade these pellets and sponge at a very high price, premium prices. And who are the going to benefit from this? So the best and the biggest is this Godawaripower. As you know, we always tell that GPIL. So Godawaripower has 2.1 million tons of capacity. Together, it is the highest capacity of pellet making in India, followed by Sardaenergy. These two are the Chhattisgarh based and the Raigad based companies. Raipur based companies in Chhattisgarh. Sarda has around zero point 0.6 million tons of, or 600,000 tons of pellet making capacity, and the third is Jindal Saw. Surprisingly, they have this unit in Rajasthan. In few years before, they had acquired the mines, and they also produce from the low grade magnetite fines. They produce this high grade of pellets of 65% and above. So most of this, you will see that this their profits and all this can simply double because of this high prices of iron ore, and particularly the high grade iron ore means pellet prices will be remain high, and the export will even increase more from India to this China, because Chinese consumer will continue to buy more high grade iron ore because of this problem with this Australia, to compensate for the low grade of coking coal which they buy from Canada and Australia. So uh, this you can continue to, you stay away from all these things and continue to be with Godavari, because if you look at the valuations also of all these particularly steel companies, it is still very cheap. If you look at this price to earnings or price to book value, that is the way. These are all at 1 times or less than 1 times, or 1.5 times at maximum, 1.3, 1.2, 1.3 times. Still, around one an average, or much less than two. And price to earnings, so they are amazingly cheap, because with this pellet prices high, you will see that their earnings can just double, triple from here onwards also for this next 1 2 years. So you can see that prices of say Godavari can reach double from here, this 1,000, and Sarda also, because Sarda and Godavari, I have seen, if you see that ratio, because of their difference in the capacity of pellet. Sarda has Godavari has 2.1 million ton, and the Sarda has 0.6. So if you 1.6 million ton more capacity of GPL. So I have found out that they see, that they also move in tandem of 1.6 times. So whatever will be the price of Godavari, you divide it by 1.6. So that way they will move. That ratio between Godavari and Sarda energy price will be 1.6 times. So you can play around that, and also Jindalsaw also, it's a surprise element, and that's regarding this iron ore and coking coal, and what is happening in this market. And another, just recently, last week only, the Savita oil technologies, which we had come out 1 month before, about that, how it is a great company, and they came out with amazing, astounding financial results, numbers of the Q3 December ending, 81 crores of profit, 810 million rupees of profit. It is almost more than doubled compared to the September quarter, and more than 4 times profit compared to the last year of the December quarter, the same quarter, Q3. So if you look at this, how it's going to move is that this year they are going to do around 2 billion rupees of profit, which will be, say, uh, at, if you look at the price earning ratio, uh, they will do almost like 140 rupees of EPS this year, and in next 2 years I believe that they will be doubling their profit. to 2.7 billion rupees, or around 200 rupees of EPS by FY23. That is my target. So you can easily see that it is already at 4 times and less than 1 times of less than 4 times of price to earnings, on price to earnings multiple for FY23. So it can easily double this. Price can easily go to say 1500 or so. So that's it. I just wanted to give you, and regarding this Savita oil technologies, all this information which we had come out with the previous videos, and Sarda and Godawaripower also we had come out with many months before a video. I will see, because all you can information regarding the background of these companies and what is the things you can see from the my link down below. I will post these links of these videos also, so you can watch it. That's it all from my side. I just wanted to share this little update about this aspect of iron ore and this Savita oil's results. Thank you for watching, and please keep sharing it. And ciao from Neeraj from Moscow. Bye. See you till the time next video comes with some other new interesting ideas.